Today, the cryptocurrency market faces unprecedented challenges as Bitcoin and Ethereum struggle to maintain their positions. Meanwhile, unique tokens like Zcash show resilience amid the turmoil. Here are today's top 10 stories you need to know. Despite the broader market downturn, Zora has emerged as a trending asset in the cryptocurrency landscape. This surge in popularity can be attributed to its connection with consumer-facing crypto, where media, identity, and monetization intersect. Over the past week, Zora has shown remarkable performance, catching the attention of investors and traders alike. The increased search interest indicates a keen interest in the narratives surrounding consumer crypto and social tokenization. While the 24-hour price movement for Zora is negative, the sustained engagement suggests that retail investors are still actively seeking innovative projects. This phenomenon illustrates that even in a challenging macro environment, certain tokens can capture the imagination of the market. Zora's ability to resonate with users underscores the importance of cultural relevance in the crypto space. Moving forward, it will be essential to monitor how this interest translates into actual investment and engagement in the long term. Hyperliquid is making headlines as it continues to attract attention in the decentralized finance space. Today, it has shown a significant price increase, with gains reported between 5% and 10%. This performance is particularly noteworthy given the broader market struggles. Hyperliquid has become a key indicator of market sentiment regarding on-chain trading infrastructure and perpetual contracts. Traders are showing enthusiasm for this platform, suggesting a belief in its long-term potential as a DeFi hub. The volume behind Hyperliquid's trading activity also highlights its growing user base and engagement. In a challenging market, the resilience of Hyperliquid indicates that investors are still willing to support platforms that offer innovative solutions and growth potential. Looking ahead, the continued performance of Hyperliquid may provide insights into the appetite for decentralized trading solutions in a risk-averse market. Zcash has emerged as one of the standout performers in today's cryptocurrency market, recording a remarkable increase of about 6.1%. This uptick is particularly significant given the overall market decline affecting major cryptocurrencies like Bitcoin and Ethereum. Traders are increasingly looking towards privacy coins like Zcash during periods of market uncertainty. The appeal of privacy and scarcity narratives seems to resonate well with investors seeking differentiated opportunities. Zcash's rise may not solely be based on fundamental factors. Rather, it reflects a broader trend where traders are willing to allocate capital into specific thematic areas, even when the overall market is risk-off. This behavior indicates that there is still a segment of the market interested in taking selective risks based on perceived resilience and utility. As we move forward, it will be crucial to observe how this trend develops and whether Zcash can sustain its momentum amid volatile conditions. Bitcoin is currently facing significant challenges as it struggles to reclaim crucial resistance levels. Analysts have indicated that if historical patterns hold true, Bitcoin may experience further downside risks. This situation is compounded by psychological factors as traders begin to reassess their positions in light of Bitcoin's inability to recover quickly from recent sell-offs. Many have opted to de-risk into stablecoins and hedge their positions with derivatives. The broader market sentiment is being influenced by macroeconomic factors, including tighter liquidity and increasing yields, which are typically unfavorable for high-volatility assets like cryptocurrencies. The implications of Bitcoin's performance are substantial, as it serves as the anchor for the entire market. If Bitcoin remains weak, it is likely to drag down the performance of altcoins and other cryptocurrencies. As we look ahead, the market will be closely watching Bitcoin's next moves, as the ability to break through resistance could significantly impact overall market sentiment. Recent reports indicate that Bitcoin and Ethereum ETFs are experiencing significant outflows, raising concerns about institutional sentiment in the cryptocurrency market. Notably, Fidelity's Ethereum ETF has recorded net outflows, while only a few products, such as BlackRock's ETH offering, have managed to attract some inflows. These outflows are critical as they serve as one of the strongest proxies for institutional behavior in the current market cycle. The sustained outflows suggest that institutions are decreasing their exposure to cryptocurrencies, which may lead to further weakening of price support levels. The softness observed in ETF flows for Ethereum is particularly troubling, given its attempts to establish a stronger narrative around staking and decentralized finance. Investor sentiment appears to reflect a cautious approach, with institutions stepping back from aggressive buying. As we move forward, the market will need to watch for any changes in ETF flows as a potential indicator of shifts in institutional interest. The cryptocurrency market is currently under significant pressure, with Bitcoin and Ethereum leading the downward trajectory. Bitcoin has seen a decline of approximately 1.9%, while Ethereum's drop is even steeper at around 3.8%. This overall market pullback indicates a broader deleveraging and liquidity squeeze occurring across the crypto landscape. The declining prices for these leading assets suggest a reduced appetite for speculative risk among investors. As Bitcoin weakens, altcoins such as Solana, Dogecoin, and XRP are also experiencing losses. The current market environment is characterized by forced liquidations in leveraged positions and a rotation of capital into cash or stablecoins. The defensive posture of the market hints at a challenging period ahead, as Bitcoin's stability is crucial for the performance of altcoins. Without a recovery in Bitcoin's price, sustaining rallies in other cryptocurrencies may prove difficult. Traders will need to remain vigilant in assessing market conditions and potential recovery signals in the coming days. Analysts are expressing caution regarding Bitcoin's current market position as it struggles to reclaim key resistance levels. Reports suggest that Bitcoin may face further downside if historical patterns repeat themselves. The sentiment is not only technical, but also psychological. Traders are becoming increasingly hesitant after failed attempts to recover from sell-offs. This leads to a shift in strategies, with many opting to de-risk into stablecoins and hedge their bets with derivatives. The market is also reacting to external macroeconomic factors, including tighter liquidity and rising interest rates, which tend to create unfavorable conditions for high-beta assets like cryptocurrencies. Bitcoin's status as the market's anchor means that its performance directly impacts the trajectory of the entire cryptocurrency ecosystem. If Bitcoin fails to stabilize, it could lead to a broader downturn affecting all altcoins. As traders navigate these turbulent waters, the next steps for Bitcoin will be closely monitored as a key indicator of market health. The cryptocurrency market is currently exhibiting a pronounced risk-off sentiment, with significant declines in major assets like Bitcoin and Ethereum. Bitcoin is down about 1.9%, while Ethereum has seen a drop of approximately 3.8%, leading this downward trend. This shift in market behavior is largely attributed to macroeconomic factors, including rising interest rates and increasing regulatory scrutiny, which have heightened uncertainty among investors. As a result, many are opting for safer investments, rotating into cash or stablecoins rather than holding volatile cryptocurrencies. The drop in Bitcoin's value, coupled with larger losses in altcoins, signals a reduced appetite for speculative risk. This risk-off environment is characterized by forced liquidations in leveraged positions, leading to a defensive market stance. Such conditions often exacerbate price declines, creating a cycle of fear and selling. Until Bitcoin shows signs of stabilization, sustaining rallies in altcoins may prove challenging. Traders and investors should closely monitor Bitcoin's performance, as its ability to recover will be crucial in determining the overall market trajectory and mitigating broader risks in the cryptocurrency ecosystem. In a concerning development for the cryptocurrency market, Ethereum ETFs are experiencing significant outflows, reflecting a shift in institutional sentiment. Recent reports indicate that Fidelity's Ethereum ETF has seen notable net outflows, while BlackRock's ETH product remains one of the few to attract inflows. This trend is crucial, as ETF flows have become a leading indicator of institutional behavior within the crypto space. Historically, strong inflows into ETFs have signaled increased confidence among institutional investors, often correlating with price appreciation. The current outflows suggest that institutions are reducing their exposure to Ethereum, leading to weakened short-term price support. This is particularly alarming given Ethereum's ongoing efforts to establish a stronger narrative around staking, tokenization, and decentralized finance. The lack of aggressive defense from institutional buyers raises significant questions about the sustainability of Ethereum's value in the current market climate. As regulatory scrutiny intensifies and macroeconomic factors weigh heavily on investor decisions, the outlook for Ethereum remains uncertain. Monitoring ETF flows will be vital in understanding shifts in institutional interest, and their potential impacts on Ethereum's price trajectory could become clearer in the coming weeks as market participants react to these evolving dynamics. The cryptocurrency market is currently under severe pressure, with Bitcoin and Ethereum leading the decline. Bitcoin is down approximately 1.9%, while Ethereum has seen a more pronounced drop of around 3.8%, triggering a broader market sell-off. This downturn is indicative of a significant macroeconomic shift towards a risk-off sentiment, as many investors opt to liquidate their positions in favor of cash or stablecoins. Amid rising interest rates and economic uncertainty, traders are increasingly cautious, reflecting a general retreat from riskier assets. The current environment suggests a deleveraging and liquidity squeeze across the crypto landscape, impacting not only Bitcoin and Ethereum, but also major altcoins like Solana and Dogecoin. Forced liquidations in leveraged positions are exacerbating the situation, revealing a lack of confidence in sustaining recent rallies. This downturn underscores the vulnerabilities present in the cryptocurrency ecosystem as traders navigate through heightened market volatility. The impact of this downturn is broad, influencing investor sentiment and strategic decision-making across the board. Looking ahead, the ability of Bitcoin to stabilize will be crucial in determining the trajectory of the entire market. If Bitcoin can hold key support levels, it may pave the way for a potential recovery and providing much-needed reassurance to investors amid ongoing uncertainties. Thank you for joining us today. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.